information about Public Bank Berhad. Public Bank Berhad, headquartered in Kuala Lumpur, Malaysia, was founded by Teh Hong Pyo, who also served as its general manager during its inception. Since its listing on the Malaysian Stock Exchange in 1967, it has grown to become one of Southeast Asia's largest bank, boosting assets totaling approximately RM 363.76 billion, specializing in commercial and consumer banking, investment banking, Islamic banking, stockbroking, trustee service, and nominee services. Public Bank offer a comprehensive range of financial services across Malaysia and the Asia Pacific region. The bank also manages unit trust fund, and life insurance product alongside providing lending and wealth management service. Established with a mission to enhance life, support families, and nurture business growth, Public Bank has remained steadfast in this objective. Founder Teh Hong Pyo envisioned it as a bank for the public, dedicated to meeting the banking needs of millions of Malaysians while upholding principles of social responsibility and community support. With over 56 years of robust growth, Public Bank continues to prioritize customer dedication and community welfare.
Digitization has a significant impact on Public Bank Berhad operation, goods and services, as well as the overall financial landscape. For example, the bank has adopted digital platform to improve consumer ease and accessibility. Customers can now perform transactions and access service 24 hours a day, 7 days a week via online and mobile channel, decreasing the need for physical branch, broadening banking service reach. This transformation has profoundly altered customer behavior, with clients increasingly preferring convenience and speed of digital transaction over always. Furthermore, Public Bank Berhad has leveraged digital technology to tailor its solution based on certificated data analytics. Understanding consumer preference and behavior enabled the bank to adapt product and service, increasing customer happiness and loyalty. Operationally, digitization has resulted tremendous efficiency. Automate process such as online account opening and digital document management has simplified operation, lowering costs and increasing service delivery speed. Enhanced security measures such as enhanced encryption and biometric authentication have also been deployed to protect consumer data and digital transactions, ensuring confidence and reliability. This innovation not only strengthens operational resilience but also help the bank to compete in increasingly digitalized network and financial sector. In the large scene of financial, Public Bank Berhad confront increased competition from fintech companies and major banking institutions that use digital advance. This competitive pressure has driven to the bank constantly innovate, providing a new digital service and upgrading current one to suit changing client expectations. Furthermore, technology has played a critical role in increasing financial inclusion by bringing banking service to underprivileged communities via mobile banking and digital payment system. This has helped to advance socio-economic development by increasing access to financial service and chance for economic involvement. However, in addition to this benefit, Public Bank Berhad and financial sector as whole must negotiate regulatory obstacles brought by rapid digitization, data privacy, cybersecurity, and regulatory compliance remain significant issue for banks as they attempt to balance innovation and regulatory constraint. Overall, digitization has altered Public Bank Berhad approach to client interaction operationally, efficiently, and global financial competitive, demonstrate the revolutionary powering of digital technology in modern banking.
Assalamualaikum, my name is Nurul Jafni. So we continue to performance evaluation. First, we have profitability ratio. The definition for this ratio is it is to measure the earnings and profitability profile of banks, reflecting the ability to support the bank's operations. Under profitability ratio, we have four: return on asset, return on equity, spread, and net interest margin. For return on asset, ROE public banks for 2023 and 2032, we can see it is a decrease from 2.72% to 2.56%, and it indicates that the bank is less efficient in 2023 using its asset to generate the earning. This could be due to lower net income or an increase in average total asset without a corresponding increase in earning. Next, we continue to the return on equity. Return on equity is it is to measure how effectively the bank is generating profit from the shareholder equities. From 2023 and 2022, we can see that it is also decreased from 26.08% to 23.22%, and it shows that the bank is less profitable in 2023. This could be due to lower net income or increased equity base. So we continue to spread. Spread is the difference or gap that exists between price rates or yields. Public bank spread ratio decreased from 9,197 million to 9,055 million. And it shows that the bank is less improvement in 2023. A decreasing spread ratio over 2023 and 2022 could indicate a long-term trend of declining performance or narrowing margins in the area being analyzed. For net interest margin, it is a measure of the profitability of a bank or another financial firm. We can see that from 2022 to 2023, it is a decrease from 1.86% to 1.77%, and it shows that the bank profitability from its core bank activity has declined in 2023. This could be due to various factors such as competitive pressure, declining interest rate, or change in the bank's asset and liability mix. And we can see 2022 more performed than 2023. Next, we continue to next ratio, which is liquidity ratio. Definitions of liquidity ratio is a measure of the ability the bank to pay its short-term liability. Under liquidity ratio, we have two. First, loans to total asset, and second, liquid asset to total asset. For loans to total asset, its definitions is it is to define how much debt a company carries compared to the value of the asset its own. Here we can see that public banks loans to total asset increase from 70.41% to 78.14%. And it shows good performance that public bank has allocated a larger portion of its asset to loans in 2023. So we can see 2023 the public bank performed, and this strategy could potentially lead to the highest interest income and profitability if managed effectively. However, it also increased exposure to credit risk. Next, liquidity asset to total asset. This ratio is to measure how well bank can cover immediate expenses if the need arise. As we can see, it is a decrease from 2022 to 2023, which is from 6.14% to 3.39%. It has allocated a smaller portion of its asset to liquid asset in 2023. This strategy may enhance profitability by investing in higher yields asset but increase liquidity risk. The bank must ensure strong liquidity management practices to maintain financial stability and meet regulatory requirements.
Hi, my name is Nur Syamsuddin Bakri, and I'll be explaining more about performance of public bank berhad. Capital adequacy is measurement of public bank berhad's available capital expressed as a percentage of the bank risk-weight credit exposure. Capital adequacy are divided into two, which are risk-weight capital and core capital ratio. So let's begin with risk-weight capital ratio. On 2022, RWCR for public bank berhad shows the percentage of 14.6% and indicate an improvement to 14.7% for the next year. It reflects marginally better capital adequacy, suggesting enhanced financial stability and resilience. The slight increased percentage demonstrates a continuous strengthening of the bank's capital position. Next is core capital ratio. The core capital ratio for public bank berhad showed 14.7% in 2023, indicates a slight enhancement in capital adequacy compared to the core capital ratio of 14.6% in 2022. Boost ratio reflects a robust capital position, ensuring the bank can manage risk effectively and maintain financial stability. It also meets regulatory standards, indicating strong adherence to capital requirements. This comparison shows that while the core capital remains strong, the overall capital adequacy slightly improved. So it's suggesting effective capital management strategies. Next is asset quality. Asset quality are referred to an evaluation of particular asset, stating the amount of credit risk associated with it. Asset quality are divided into three, which are non-performing loan, loan to deposit, and deposit to shareholder funds. Okay, Public Berhad's non-performing loan ratio was 0.3% for 2022 and remains stable in 2023 at the same rate of 0.3%. This consistent low NPL ratio reflects the bank's strong credit risk management and overall financial health during this year. Next is the Public Bank Berhad's loan to deposit ratio, which increased from 0.95% to 0.97%. It shows a shift towards more active lending, reflecting confidence in loan demand and economic conditions, while still maintaining a safe level of liquidity. The increase suggests the bank is leveraging a larger portion of its deposits for lending. The last one is the rise in deposit to shareholder fund ratio from 7.55 in 2022 to 7.87 in 2023 suggests that Public Bank Berhad has enhanced its ability to attract deposit relative to its shareholder equity, indicating improved financial leverage and operational efficiency. The increase might also reflect confidence in the bank's stability and attractiveness to depositors.
Next, we continue to management soundness. The definition for this ratio is to determine by looking at quality of management in controlling expenditure and operating expense of the bank. A decrease, as we can see here, a decreased public bank's management soundness from 6.59% to 7.41%. It shows that poor management practices in 2023. As we can see here, a decrease in a metric because of challenges or weaknesses in leadership, strategy, directions, operational efficiency, or risk management practices within the organization. And because of this, the decrease of metric, and it shows that public banks' performance in 2023 less efficient to 2022.
I will talk about overview of banks, product and service. Public Bank Berhad offer a wide range of product and service designed to meet the financial needs of individual and business. There is a brief explanation of its main product and service, including their features, benefit and potential drawbacks. There are several product and service in public banks such as insurance, banking, digital banking, loans, investment and card. First is banking. Public banks provide several types of service like a current and saving account. The feature of banking is a range of account kinds with various bonus and interest rate. The benefit is including online banking, ATM access, and a simple and safe way to handle daily finance. The potential drawback is a few accounts can have. Next is digital banking. Public bank provide a comprehensive online banking platform and mobile banking apps. This platform allows customers to manage their accounts, transfer funds, pay bills, and perform other banking transactions conveniently from their computer or mobile device. The benefit is customer benefit from 24/7 access to banking service, reduce reliance on physical branch, and the ability to bank on the go. The drawbacks is a connectivity issue or security concern could potentially affect access and user experience. Next is a loans. Public banks provide personal loans for various purposes such as education, home renovation, or emergency with flexible repayment terms. The benefit is quick approval process and competitive interest rate, and the potential drawback is loans require repayment with interest, and failure to repay on the time can lead to penalties. Solutions. Public Bank Berhad maintain high profitability with a strong net income and robust return on equity (ROE) from 2022 to 2023, driven by effective cost control and a stable net interest margin (NIM) despite challenging economic conditions. The bank upheld a solid liquidity position throughout both years, supported by a high liquidity coverage ratio (LCR) and substantial reserve of high-quality liquid assets, which mitigated market volatility risks. Public Bank Berhad exhibited excellent asset quality with minimal non-performing loans (NPLs), attribute to rigorous credit evaluation and prudent risk management practice. With a comfortable capital adequacy ratio (CAR) exceeding regulatory requirement, the bank maintained a healthy capital base that enabled it to manage potential losses and expanded lending activities. Guided by strong operational governance and a commitment to sustainable growth, Public Bank Berhad's careful risk and capital management strategies underpin its consistent financial performance, ensuring strong profitability, liquidity, and investor confidence amidst a challenging market landscape. That's all for me. Thank you.